Imagine a bubble. A bubble that's so big it's bound to burst with absolute certainty. This is the image that David Rosenberg paints of the current equity market. It's not merely expensive, but in his words, stupid expensive compared to just 8 years ago. And that's not all. He warns of extreme complacency in the markets, with many investors betting all their chips on the same trade. And if you think that's concerning, consider this. Over half of the market is now in passive index investing. Rosenberg also raises red flags about the potential impacts of protectionist policies, particularly proposed tariffs, with a staggering 60% on China and 20% on others. As we move forward, Rosenberg believes inflation will continue to decline, partly due to political pressure. He warns us that the stock market is currently overvalued, placing us in the top 5% of expensive markets of all time. Despite the current bullish phase, he reminds us that market cycles haven't been repealed and an eventual bear phase is expected. Turning to the policies of President Trump, Rosenberg believes the market is way ahead of itself in pricing and expected tax cuts. He's skeptical about the implementation of aggressive tariffs and deportation policies. While he expects continued deregulation, he doubts major corporate tax cuts will happen. And the Federal Reserve? He doesn't expect Trump to successfully take control. Now, where should we place our bets in such a volatile scenario? Rosenberg suggests safe havens including gold and precious metals as portfolio stabilizers, with a personal preference for the less volatile gold. He also suggests treasury bonds and commodities, particularly base metals if China stabilizes. With regards to oil, he views it as a contrarian play, especially if Trump and Iran sanctions return. If China implements fiscal stimulus, Rosenberg sees potential in base metals like copper, aluminum, zinc, and nickel. On crypto, he acknowledges Bitcoin's potential under Trump's pro-deregulation stance, but remains cautious. Looking at the geopolitical outlook, Rosenberg expects Trump could resolve the Russia-Ukraine conflict, likely with concessions from Ukraine. He believes Trump will give Netanyahu a longer lifeline regarding the Hamas conflict. He views Iran as the most significant geopolitical risk, more so than China. China, he suggests, is less of a threat due to their structural growth slowdown. Rosenberg's strategy advocates for conservative investing, bunting for singles rather than swinging for the fences. He recommends a higher bond allocation than current market consensus, suggesting more than 9%. He sees bonds and gold as portfolio stabilizers rather than wealth generators. Despite the recent surge in cryptocurrencies, he remains cautious, preferring gold's longer track record. In conclusion, Rosenberg's message emphasizes conservative positioning with significant allocations to traditional safe havens like bonds and gold, while being cautious about current stock market valuations. The key risks: a potential global trade war, continuing political polarization, high global debt levels, and partial deglobalization trends. And so, with this analysis, we move forward into an uncertain market, armed with Rosenberg's insights and recommendations.